Per usual, everything on the channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's take a look at leveraged ETF products and the issues you can run into as a buy and hold investor. And if we pull up an example, NVDL, we'll take a look at crypto examples in a second, but just looking at NVIDIA versus NVDL, which is a leveraged 2x ETF. When you flip through the timeframes here, you'll notice something. If this is truly a 2x representation of NVIDIA, over time, this should hold its 2x nature. So this is a 6-month timeline for NVIDIA versus NVDL, and you can see it doesn't quite line up on the 2x product. Depending on the asset, depending on the time frame, you will notice a very, very large disconnect between the underlying asset and the derivative representation in the ETF. This is what's known as volatility drag. I'll get to this in a second, but essentially the negative compounding. So price gets more and more and more disconnected over time, generally, because of the fundamentals of how these ETFs are constructed. They're rebalanced daily, as well as the fees on ETFs, which are generally higher than holding the underlying spot position or a non-leveraged ETF. So over time, many of these high volatile leveraged ETFs have a risk of completely going to zero. So as a trading vehicle, they are great. We can pull up, let's look up BITI versus BTC, okay? This is since BITI's inception. BITI is a 1x inverse of BTC. I got BTC inverse scale here, BITI in the white line there. And you can see despite Bitcoin's rise on the inverse scale, so as we know over the past couple of months, Bitcoin has been declining. Despite that, we are not really tracking Bitcoin very well over time on the BITI side. Now, one thing you'll notice with these products is when we are trending, when we are highly directional, which crypto is known for, highly directional, we're talking one direction, baby, only down, only up. That's when these products really shine and really do well over a longer period of time. If we zoom in, if we zoom all the way in, intraday, intra-week, some of this can hold fairly tightly, but even still, it is quickly disconnected as you go out on the time frame. So for these products, you really want to be surgical, tactical, opportunistic, highly specific. The last thing you want to do is just assume, oh, this is 2x BTC. I'm just going to hold this on bullish BTC. Why wouldn't I hold the 2x product, right? Well, this is why. Because of volatility drag, because of the daily rebalancing, because of the negative compounding, this stuff can really, really get away from you. And then you start to trade something completely different. It's not even inverse BTC at this point over a long period of time. But on an intraday or intra-week time frame, intra-month even, you're probably okay. But the longer you hold this type of product, you just have to know that the highly volatile stuff will get increasingly disconnected. Even if we pull up BITX, since inception, spot BTC is above BITX, which is the 2x ETF. So if you held this since inception, you're eating fees and you're underperforming spot. Again, however, during this period where we had a unidirectional move and it was strong, powerful, swift, clear, that is when the 2x product in the white here played out as expected. This was a fairly short time frame, 1 month, maybe a month and a half. And that is really the best time to hold products like this. So you need the momentum on your side. You need the strong trend on your side. Even looking at recently, since March, since April, BITX is heavily underperforming spot. One other thing to consider to add a layer of complexity with these leverage ETFs, they use derivatives. BITX uses futures. So there's roll risk with the futures contracts. There's roll drag, I guess you'd call it. There's a dividend attached to this. It's very, very complex. There's a lot of variables, and it's hard to really measure this up as a 2x product over time. It gets a lot of eyeballs and attention because it has a very high yield. That's partially because of the futures premiums, but you definitely have to know and understand over a long period of time, over even a quarter, even a month or two, depending on the volatility, there is heavy, heavy disconnection from price. And if we go to an extreme example, there was an article on this a few weeks ago now. Europe has a 3x leveraged MicroStrategy ETP, and this thing disconnected this year in April. You can see it there in the black line, disconnected completely. This is since January 2024 year to date, disconnected completely from the underlying price. And this is within a few months, right? January, February, March, April, May, and you're already disconnected and you never really get reconnected. So again, this is not a buy and hold vehicle. You know, we have MSTX in the US. That's going to be a 2X product probably, but you just have to be very, very careful with this stuff. And if we look at why, again, daily compounding may result in returns which an investor may not expect. The investor has not fully understood how such ETPs work. Due to daily rebalancing and compounding, returns measured over periods longer than 1 day differ significantly from the underlying stock return over those periods. So for the most part, you're probably never taking long-term capital gains on this stuff because you never want to hold it long enough. You never want to hold it over the course of a year. All of this is probably going to be short-term capital gain as far as taxes are concerned. We're talking about very quick moves, ideally with fast momentum, but sitting in this stuff over multiple months that are highly volatile and downtrending is the absolute worst environment for a product like this. There are many, many, many leveraged ETFs, TQQ, Q, extremely popular. You can see the AUM there. Some of these have dividends, like I said, some of them don't, but caveat emptor, buyer beware, you definitely have to be careful. So for ChatGPT, to summarize, what are the issues with leveraged ETFs? Daily rebalancing gives you volatility drag in a volatile market and a disconnection from price. As they say here, performance deviation over time. You have increased volatility, obviously, in the leveraged ETFs. Potential for large losses, that should be obvious. Higher costs also should be obvious. Nothing is a free lunch. Just assume if there is a leveraged product versus a non-leveraged product, the leveraged product will have more fees guaranteed. We've talked a little bit about complexity and market timing, obviously, and that's where trend trading or breakout trading probably most beneficial for these type of products versus buy and hold. There are plenty of spot products. There's spot crypto you can hold that is not 2X products that will not decay you away over time. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Non-investment advice, crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PVI, DBA, Kraken. BTC doing quite well pre-FOMC. We'll see what happens during the meeting at 2 o'clock EST tomorrow. After Powell speaks, markets tend to move a lot around that time period, whether or not it's going to be 25 or 50 basis points. But for leveraged ETFs, this process is kind of the opposite of impermanent loss and yield farming. With yield farming, you actually want lots of transactions in a tightly bound volatile range, kind of like we have here. So to see this type of price action with something like BITX over time, even MSTR and leveraged MSTR, is again the worst thing you want to see if you're holding this stuff. And you want to wait to capitalize on the leverage stuff when we are obviously trending. That's when you want to save it. So when is the best to use leverage? Well, if you're using TA and trying to time the market, not investment advice, but generally it's going to be when you're most sure of the direction. And currently that wouldn't be until we're above 65. So I'll leave some more resources here for those that are curious, but the message is clear. You do not want to hold this stuff over an extended period of time because it gets disconnected from the underlying. There are high fees associated with these products as well versus spot products or the underlying. And over time, you have significant negative compounding. The SEC even wrote something up on this, I think in like 2009, and they updated it recently. And I don't think enough people realize what exactly happens over time if they're holding this stuff. The tracking error, if we can call it that, just amplifies over months and especially over years. And if we look at the fees for these products, this is BITU. There's the expense ratio that's decently high. It's higher than most ETFs, certainly. Now this is BITX, extremely high relative to ETF land. But again, this is futures, there's a dividend, there's all sorts of stuff here that I don't think most people understand. But again, over time, you are getting diluted away. You're getting eaten alive if you're holding this over time. And this is BITI, also quite high on the expense ratio on the inverse ETF side. Another resource just for those curious. There are definitely significant risks involved. Now, there are some ETFs trying to be launched that aim to limit volatility drag. And these rebalance weekly and monthly instead of daily. And we'll see over time if that makes a significant difference or not. I suspect it might help, but you'd still have issues over a long period of time. And if we just want to visualize a year of decay where you've got alternating days plus 10%, minus 10%, which is basically what we've seen on BITX and BITU, and certainly MSTX will see this. It's just over time, you almost cannot catch up to how disconnected this becomes. And this isn't just an example. This literally happened this year with MSTR. So I think the message is clear. Be careful with this stuff. You want markets to be clearly trending, obviously trending. You don't want to hold this over extended periods of time because the volatility drag and the rebalancing will eat you alive. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.